Hawaii. I became a real estate salesman, and I sold land for a year, and then I sold houses for a year, and then I decided I didn't want to work on the weekends, and I started selling commercial real estate. And I sold commercial real estate for a while and decided, am I loud enough, Josh? I got enough signal? I decided I wanted to own some of this stuff. And I had a pretty large organization. I had 63 salesmen at the time. And I decided I was such a brilliant real estate salesman that I would be an excellent developer. And I bought a piece of land. I didn't really buy it. I bought a leasehold on a piece of land on the Alawai Canal in Honolulu, and built a 23-story office building, and was able to lose more than $1 million in just a few months. Pretty much wiped out the last couple of years and stuff. And it took me 13 years to pay that all back. So I can tell you what not to do. I am really good at that. I tell you a lot of things to do, but I'll tell you a few things that are not to do things that'll keep you out of trouble, hopefully. We're going to have a good time. I believe in having a good time in these sessions. I don't worry about not getting it all or not writing it all down, because you're going to have resources that we'll tell you about as we go along after the fact. How many of you are satisfied so far with how much money you paid versus what you're getting? Not too bad. Well, you don't just get what you pay for. Did anybody tell you that you have to do a 3-hour timeshare presentation? They didn't mention that? Damn it. Okay, I'm going to start with something that's not on the schedule. Turn in your, let me have one of those manuals. No, this manual. Turn in your hymnal here to almost the very end. It'll be page 52. Page 52. Thank you. Almost the very last thing we do tomorrow afternoon is financing. How many of you think that that might be one of your more important things to worry about? Okay, so I'm going to start with that instead of ending with that. I'm going to end with that too, but we're going to start with it right now, because I want to get your mind right, if that's possible, about financing. When you think of finance, what do you think about? Well, what kind of money? What kind of money? Whose money? Borrowed money. How many would say that that's a common perception? When I say I'm going to finance the deal, then what am I talking about? I'm going to go borrow money and pay for the deal, right? No. I'm going to go get the money to pay for the deal. This building, for example, I have a contract on this building to buy it back for $16 million. I'm going to finance 100% of that $16 million. How am I going to do it? No, it isn't. You just think it's awesome. You just think it's awesome. I'm going to do what you do when you finance a building. I'm going to bring $16 million to the deal. There are 1, 2, 3 mortgages, 2 mortgages. 2 mortgages already in place. I own one of them. And there are, and then the guy wants some cash, $1 million, and he's going to loan me another $5 million. I'm going to take over 3 loans, get his cash, and then I'm going to go out in the marketplace and get a whole slew of equity to build the tenant improvements in this building and to reduce some of the loans, reduce some of the debt and so forth, so that we have a pretty good equity position. You see, financing is just bringing the equity and the debt, if any, to the deal. But I always start with the equity. I'm not concerned about how to borrow. How many of you would like to know 15 new wonderful ways?